Good evening, all of you. On the behalf of the Professional Development Committee of the Western India Regional Council, the Institute of Cost Accountants of India, I welcome all the participants and our today's speakers on webinar series on intricacies of cost audit and cost records, coal sector. Our today's speaker is CMA Alokesh Datta, sir. Welcome, sir. Alokesh Datta is a Bachelor of Science from Kolkata University and a fellow member of the Institute of Cost Accountants of India. He is a practicing cost and management accountant and a registered GST practitioner. He is the immediate past chairman of the Institute of Cost Accountants of India Bilaspur chapter and past task force member of Western India Regional Council of the Institute of Cost Accountants of India for Cooperative Trust, MSME and Banking. He is having more than 40 years industry experience in finance, auditing, costing, budgetary control, taxation, project financing, company law matters, and consultation in various fields, especially for MSME sectors. He is an activist for MSME sectors and continuously helping several MSME units. He regularly conducts live streaming in LinkedIn, YouTube, etc., social media platforms about different aspects of professional interest and a corporate trainer. He also developed and maintained a website CMA Guide India for helping CMA fraternity. He is the founder partner of the Alokesh Datta and Company, senior partner of RM Bansal and Company, ME Turakia and Associates, and proprietor of Alokesh and Associates, all cost and management accounting firm. I welcome sir, and now I request sir to kindly start the session, sir. Thank you.
Thank you, Pujanka madam.
Thank you, sir.
First of all, I welcome all the participants and good evening to all. I thank to the Vice Chairman of Western India Regional Council of ICWA, CMA Arindam Goswami, who has given me the opportunity to be a speaker in this series. I also thankful to CMA Chaitanya Mahari, Chairman of the WIRC, who has also given me the scope, along with CMA Mihir Bas, Secretary, and CMA Nantisha. I all give to all thanks for my side. I am not a new person in the WIRC or Institute of Cost Accountant of India. Since from my student life, I associated with various programs in the institute, and presently I am regularly conducting seminar or webinar on behalf of our Bilaspur chapter, or in my personal capacity, or in the platform of WIRC or CA institution. First of all, let me introduce some little bit more that I have served in coal industry more than 30 years. I started in coal industry in 1988, August 1988, and retired on 30th April 2019. And all along, I have been posted in cost and budget department, along with taxation and other fields. So, cost and budget, costing is in my blood. So I thought that I have to share something amongst our fellow colleagues or students so that they can enrich themselves with my experience and with my knowledge. With this view, I started alone in conducting live streaming in various platforms, and from various sectors, from various platforms, I have been requested to conduct a webinar. Similarly, WIRC has requested me to do take some classes on intricacy of cost audit and cost records in coal sector. As because I am from coal sector, it is my mother company. So I think I can do justice to the organizer who has given me the scope. I once again thank CMA Arindam Goswami, CMA Chaitanya Moheri, CMA Mihir Bas, and CMA Nantisha. Now I start my presentation. Am I audible or visible? Anyone can speak?
Yes, sir.
Okay, just start.
Okay.
You see, this screen is completely filled with coal because our topic, today's topic is coal sector. So the screen I have chosen that this is a field of coal, first screen. One thing I have to mention that though the content is mine, but the design and the pictures and everything has been done by my junior, Richa Jain, who is done this in a good manner so that it will be presentable, and she will be a soon cost accountant because she appeared in the December exam, and I hope that she would succeed in the exam and will be partner of my firm cost Alokes Datta and Company. Then credit goes to Richa Jain. The content is mine, but design is Richa Jain. Okay, let's start. Now, coal industry is a vast industry, and mostly it is a very crucial and very cumbersome, and too much intricacies are there. There are three segments in the coal industries. Number one, Coal India Limited, which shares 82% of the total coal industry. Second is Singareni Collieries Company Limited. This is another company that is a state PSU in Telangana. Our Coal India is a CPSE, that means Central Public Sector Undertaking, which market share is 82%. And another third player is private players, that is 9.5%. So total 100%, out of 100%, Coal India is alone 82%. So you think that the major player is Coal India, and my presentation will be based on coal industry, so that because any other Singareni Collieries company also follows the procedures and techniques and book record keeping along like Coal India, and the private players are also similarly doing same sort of exercise in their record keeping. So my focus is on coal industry cost records and cost audit. Now, Coal India Limited has 8 wholly owned subsidiaries. What are the subsidiaries? Number one subsidiary is Eastern Coalfields Limited. This is the office gate. Eastern Coalfields Limited is one of the 8 subsidiaries in Coal India Limited. Its headquarters is Asansol, West Bengal. Next one is Bharat Coking Coal Limited, BCCL, that is in Dhanbad. Next is Central Coalfields Limited, CCL. It is in Ranchi. Its headquarters is Ranchi. Basically, it is operating in Jharkhand. BCCL is operating partly in Jharkhand, partly in Bihar, and partly in West Bengal. Eastern Coalfields is basically in West Bengal. Northern Coalfields Limited, it is also a subsidiary of the Coal India Limited, NCL. It is in Singareni, that is come under Madhya Pradesh, MP. Next, Mahanadi Coalfields Limited, that is MCL. It is operating only on Odisha. Its headquarters is Sambalpur. Next is Western Coalfields Limited. Its headquarters is Nagpur, and basically it operates in Maharashtra and MP. Next, in my company, Southeastern Coalfields Limited, I have retired from this company, and all along I worked in Southeastern Coalfields Limited, my own company, and its headquarters is Bilaspur, and it operates not only in Chhattisgarh but also in Madhya Pradesh, and also a small part of this company, Dankuni Coal Complex at Kolkata, that is in West Bengal. Next, the research team, that is our designing team, Central Mining and Planning Division, that is CMPDL. Its headquarters is also at Ranchi. And next is that is all 8 subsidiaries I have covered. These are the all subsidiaries of Coal India Limited, and all subsidiaries are wholly owned by the Coal India Limited. That means 100% shares are holding by the Coal India Limited. As such, the administration is controlled by Coal India Limited, though they are all individual companies and registered under Companies Act, but still as a holding company, Coal India administers on all the subsidiaries. That is the administrative hierarchy. It will come. Why I am telling this? It will be helpful to understand the record keeping of the coal sector, and also the treatment of various cost elements in the cost records. Next, hierarchy of subsidiary limited. In any subsidiary, there are certain offices, that is head office, one subsidiary consisting of different areas. Central workshop for E&M, electrical and mechanical equipment, that means underground mechanical equipment repairing shop, workshop. Central workshop for excavation, that is HEMM repairing workshop. Central hospital, training center, washery. Almost all the subsidiaries have the same pattern, little bit different in different subsidiaries. ACCL has also one of the major part in this, which is not shown in the chart. That is because for common subsidiaries, these are the element. Dankuni Coal Complex, where completely different products are produced by the Coal India Limited. That it means through Southeastern Coalfields Limited. I will talk to this latter part in the webinar. For the simplicity, now you take this, one subsidiary consisting of head office and different areas, central workshop for underground equipment repairing, central workshop for excavation for HEMM repairing. Now one can ask, what is HEMM? HEMM means heavy earth moving machinery. Central hospitals, central hospital means 2-3 areas. Central office cater 2-3 areas. There are 3-4 central hospital in any subsidiary to cater the central hospital, apart from individual areas, regional workshop, regional hospital. Training center, there are training center in the subsidiary level also, and also in area level, that will discuss in next slide. And washery. In some of the subsidiary, that is ECL and WCL have BCL has washery, but SCCL has no washery. Next, hierarchy of area. What are the different constituent element of the area? Under one area, there are different mines. Regional workshop, which cater only to that area only. Sometimes if the regional workshop is producing certain items, that is support items, it will cater also other areas also. But generally each area having different mines, regional workshop of its own, regional stores to cater the different mine store, combined signing of rail dispatch. It means 2-3 mines combinedly send a particular siding. Not all areas having separate dispatch point of rail dispatch point. 3, 4, 5 sidings are there in a particular area, apart from other mode of dispatch. That will be discussed in the latter part. Area office, which is the administrative office of that particular area. Regional hospital, which cater only to that area. Area training office center, which cater only to that area. Mine rescue station, which cater only to that area, not only to that area, but also in the adjacent areas. There are 3-4 mine rescue stations in a particular subsidiary. So why I am telling all these things? Because cost treatment of cost elements or apportionment or allocation of cost depends upon the organization structure and the services produced by the different cost center, whether it is a production cost center or whether it is a service cost center. Next, hierarchy of mines. Under a mine, there is different inclines. Even in a particular mine, there are different inclines. Manager office or pit office. Each mine must have a manager office, that is a statute as per Mine Act, or pit office, which is colloquially speaking that it is a pit office. Sub-area office. In some area, in some mines, there is a sub-area office also. Or in area, there is a sub-area concept. Some area has a sub-area concept, but nowadays almost sub-area concept has gone. Sub-area means one area, maybe 1 or 2 sub-area. Under that sub-area, 2-3 mines are there. This type of organization hierarchy also can be seen in the coal industry. Mine workshop. Within the mine, there will be a workshop for petty repairing, apart from regional workshop of the area. Mine store, that means any material coming from the regional source of the area, first received in the mine store, then from the mine store it will be issued to the mines. Mine hospital, that means for immediate treatment of the patient, the mine hospital is there. It is required as per Mines Act. Mine training center. In some mines there may be a mine training center, but most of that mines do not have mine training center. But some of the mines are having individual training center for their own training of the employees. CHP and coal bunker is must. Not otherwise the coal will not be handled or dispatched through either through road or through rail or through belt. Siding of rail dispatch. In some of the mines, they are having their own siding, which may cater their own mines, also cater services to the other mines also of that particular area. I am telling that it is there is no such uniformity in coal industry, because each and every area is separate from other area. Each and every mine is separate from other area. So to understand the intricacy of the coal sector, you have to first learn what are the main constituent elements of the organization structure, and how the data is flowing, and how the cost is apportioned or allocation. So for better understanding, I have given it very simple so that everybody can understand. Nature of the business.
what happens is like it's not
Nature
like
of the business means
we can have a particular share for the 30 years. So we'll get to
extraction of
extract
coal,
from the Tata.
UG through UG mines or OC mines.
Invested into the Tata.
Next, conversion of coal to washed coal through washery. In some of the subsidiaries as having washery, their washed coal also sold. But this is for 2-3 subsidiaries, that is ECL, BCCL, and WCL. I think in WCL, washery has been stopped functioning. Only the siding is working in the WCL nowadays. And dispatch of coal. Dispatch of coal, there are different modes. One mode is rail, most convenient mode. Road dispatch, that means road cell. Conveyor belt, through conveyor belt to nearby power station. MGR, merry-go-round system, also seen in different areas for coal dispatch. These are the nature of business. First of all, extraction of coal from either through UG mines or through OC mines. Conversion of raw coal to washed coal through washery, or dispatch of coal. Whether it is a raw coal or washed coal, that should be dispatched through either rail, road, or conveyor belt, or MGR, etc. Generally, washed coal is dispatched through road or rail, not through conveyor belt or MGR, because then the ash content is more. Washery is used to reduce the ash content in the coal to get it more productivity. The role of the washery is like this. But in most of the cases where washed coal is not necessary, where the ash content can be tolerable, then they are directly from pit head or siding, the coal is being dispatched without washing. Methodology of coal extract. There are two types of methodology, underground mines and two open cast mines. In underground mines, solid coal is busted. You can see the person is drilling in the solid coal in the underground, and after drilling there will be they will put their detonator and explosive in different holes, and after that from a very distant area and they will blast this coal for extraction through manual loader or through and dispatched through out through coal tap. But nowadays, almost all the mines are transferred to converted to mechanized mine, and in mechanized mine there are different equipment, that is high wall, short wall, continuous miners like this, HDL, LSD, like this. These are the equipment used in extraction of coal from underground mines. From open cast mines, there are directly remove the overburden. Without removing the overburden, the coal cannot be extracted. Blasting of solid coal by explosive and surface miner, or through surface miner operating. In surface miner case, there should not be any requirement of explosive. Now, the difference between the underground and open cast. For underground, there should be a tunnel in the incline. Underground means below the ground, and open cast means if overburden is digging, the coal is exposed. But not in underground, you have to go through the tunnel and explode the coal by through blasting, and after that coal has been extracted through either through machinery, mechanized mine, or through manually by loader, coal loader. This is the mechanism of coal sector operation, and in the all each operation, efficiency is hidden. It means if you want to report or if you want to value add to your report, you have to understand the operation of the particular mine or particular area where you are been appointed as a cost auditor, how the coal has been extracted, you have to know, because every equipment have different norms and different phenomena. Now I am coming to the point, the equipment used in the mine. This is SDL, size discharge loader. Erstwhile, when the mechanizing started in the coal mine, SDL has first come to rescue the, to replace the manual coal loader. Next, this is the LHD, load hull dump loader. This is far better than SDL because SDL has capacity of 100 ton per day, but LHD has capacity of 170 ton per day extraction of coal. And next coming short wall mine, short wall machine. Next come long wall machine. Next come latest technology is continuous miner. Now, where there is a possible continuous mine, it for a particular minute, it extracts 40 ton of coal through the belt. That means huge capacity is in the continuous miners. So, if you see this phenomena, start from SDL. SDL improved version, LHD is coming, has come. Short wall machine, long wall machine, continuous miner. Short wall machine and long wall machine has been derived, purchased from Russia. SDL and LHD is Indian machine. Continuous miners are coming from South Africa or England, the main supplier. Nowadays, in India also, one or two companies started producing continuous miners. These are the equipment used in the underground mines. Now, what are the equipment used in the OC mine? Shovel. This is the most easiest machine for a small OC. Shovel dumper combination is used, but for big open cast mines, there will be a this is shovel and this is dumper. Dumper is also having different capacity: 40 ton dumper, 100 ton dumper, 240 ton dumpers. These are the different capacities of dumper. So, if you compare 40 ton dumper with the 240 ton, it will be irrational. So, you have to know the capacity of the dumper for comparison purpose, for cost, for ascertainment of cost also. 40 ton dumper is less costly. 100 ton dumper is much more costly because it requires much more diesel. 240 ton dumper is also much costlier because it consumption of diesel is more. Also, the OTR tire used by the dumper is also costly. So, you have to learn, know the what type of dumper is using in the mines. Next, drag line. In most of the cases, in big open cast, shovel will not be helpful, much helpful. Drag line. Drag line also come from Russia, Russian drag line. Next come drag line is the most important part, and you believe me, within the drag line machine box, that is the yellow portion, there will be an AC, air conditioned machine, so that the operator cannot feel discomfort in the heat and can operate the machine very easily. This is the latest technology, surface miner, and this is the dozer. This also utilized for sizing or setting the OB removal, because when the OB is removed through explosive, there will be a scattered in the coal face. For arranging systematically, dozer is used. Dozer is also used in the mining sector for preparing of haul road and etc. Now you will tell the what is haul road. Haul road means where the equipment that is dumper and drag line are moving through the open cast mines. Methodology of coal dispatch. Now coal has been extracted. What are the methodology we have discussed? Now how you will dispatch? First, for any coal dispatch, you need a coal handling plant called CHP. Coal handling plant. What are the role of coal handling plant? Coal is coming from the underground or open cast through belt, and it will be resized in different sizes depending on the original size of the coal, 35 mm or 100 mm like this. And the pricing of the coal depends upon the size of the coal. There is a steam and slack concept. There is a steam and slack concept. Size of the steam is one, and size of the slack is means very small thickness. But in a slack, steam is in sizable quantity. Steam is sizable quantity. The cost of the steam, the selling price of the steam is high than slack. And another variety is available, that is ROM. All are the role of CHP. These are decided when the coal has been blasted in the open cast mine or underground mine. There will be no size. That big chunk are available in the after blasting, and that will be sized in the coal handling plant. That means coal handling plant itself is a big role in deciding the selling price. Next is road dispatch. Sometimes coal has been stocked at nearby pit head, that means nearby underground mouth, or coal stock, open cast mine, and that will be directly dispatched through road. You will see that this is a coal is loading in the truck, and from here it will be directly out from the mines and go to the destination. This is a road dispatch. For road dispatch, there is a methodology of the company coal sector, that the advance pricing has to be deposited, value has to be deposited in the headquarters, and after that there will be a DO letter. That means delivery order required. 45 days is time, and within that time the coal has to be lifted from the particular mine. The DO order also written the time and date, and within which the coal has to be lifted, and the from where it is to be lifted. Next is rail dispatch. Now rail dispatch is in each and every area, mostly 2, 3 or 4, 5 sidings, and depending upon the distance of the mine from the siding, the coal is coming here through truck, coal transportation, which is called coal transportation, from pit head or stockyard to the siding, and after siding, from the siding, coal has been dispatched through loading machine, and coal has been dispatched to wagon. These are the local. Now, in rail dispatch, N box is latest technology. developed by the railway. One thing you must know that the rail dispatch, when the rail dispatch is doing, rail has placed the wagons in the assisted siding. So what is assisted siding? Assisted siding is means from the mainstream of the railway track, main line, to the colliery or to the
दूर
siding.
से दिखता है क्या तेरे को?
This
यहाँ से दिखता
siding
है
is
क्या? यहाँ से नहीं दिख रहा है?
this
क्या लिखा हुआ
siding.
है? क्या लिखा हुआ है? क्या लिखा हुआ है?
Please unmute your mic.
Yes, sir.
Through rail dispatch, there will be a many thing the railway has allowed the Coal India to lay the railway lines. The cost of the railway siding, assisted siding, to be borne by the respective area or respective company, so that wagon can be placed nearby the nearby siding. So one thing you must consider while cost audit, the cost of the transportation from pit head, that means where the coal has been out from the underground mines, or where the coal face for open cast mines to the siding. This is the transportation cost, coal transportation cost. We are coming later part in this discussion, but this is the one method of dispatch of the coal. Next is belt conveyor. In nearby power station, coal may be dispatched through the conveyor belt directly from mines to underground mines to the their stockyard, the powerhouse stockyard, directly conveyor belt. But it may be 2-3 kilometers, almost 2-3 kilometers, within 2-3 kilometers it can be dispatched. But it cannot be dispatched more than 10 kilometers, 20 kilometers, because that will be cumbersome. It will be go through the public road. Next point is merry-go-round. It is also one of the type of merry-go-round. If nearby power station is having this system, merry-go-round system, that is the tub is something separate from the original railway wagon. It will be go around, go, and it is also driven by the engine. But the engine and merry-go-round system will be either for Coal India or for the powerhouse, depending upon the customer, depending upon the agreement between the Coal India and that customer. These are the available method of coal dispatch. So depending upon the dispatch, whatever the case may be, the cost of the dispatch is recovered from the customer. Coal India will not have any expenditure against that freight, because freight is included in the coal bill. And for road dispatch, obviously there should not be any freight, because coal has been loaded in the stockyard of the colliery mine itself. So there will be no additional cost of the company, also not additional cost of the customer. But the road sale is for only high grade coal, that is whose GCB value is very high. That is GCB 1, 2, 3, 4. This is the actually road sale. Again, company has a policy of sale in auction. Auction sale is mostly going by the road only. Mostly, I am telling what the mostly, because some auction sale may be dispatched through rail, but that is, the chances is very little. The premium or auction coal is delivered through the road sale only. So because road sale is directly picked up from the mines, and there will be no extra cost, so customer can get high value of coal. So customer can agree for giving 10% or 20% premium against above the notified price. because coal is sold in normally for rail dispatch or road dispatch or at notified price. What is notified price? I will discuss in later on. For the time being, you just see that the coal may be dispatched either at notified price or at premium price. Now, cost centers. At present, one thing at that, I am a lead cost auditor of Coal India Limited at present as a senior partner of RM Bansal and Company. Now, the existing cost accounting policy of the Coal India formulated in 2017. At that time, the Coal India has no SAP or ERP system. So, cost accounting policy has been prepared on the basis of manual data preparation of cost records, and accordingly up to 2022-23 the cost records and cost audit has been conducted on the basis of old cost accounting policy, though company has introduced the SAP in the year 2019 or 2020-21, and now SAP is running very smoothly and operatively. I have suggested the company to rebuild the cost accounting policy, also to prepare the cost annexure to the cost audit report through the SAP, and the audit committee and the board of directors of Coal India Limited has gladly accepted my suggestion, and I hope that in the next year I will see that revised cost accounting policy as suitable as per our present data capturing system through SAP ERP, and the annexure to cost audit report will also be prepared through the SAP ERP to make it error free. Now, for the time being, I am discussing all mines are production cost center as per present cost accounting policy. That means every data, all mines are having average cost statement. Average cost statement is being prepared for every cost in every head. Next, there are different service center also, hospitals, workshops, stores, which I have already discussed in the hierarchy of the areas. Workshops, stores, training center, these are all service cost centers. Expenditure of service centers are apportioned to the different mines to absorb cost into production. How? I will show you in the next slides. At present, all mines are production cost center. The production cost center absorb the expenditure of service cost center through some suitable basis. That will be discussed in detail in the later slide. What are the data sources? Financial data at first, my financial data are captured at mine level. Each mine has a unique code in the computer, and data has been captured through the mine. In a particular area, the data of the particular mine will be captured at mine level. Also, data is captured at workshop, regional stores, regional hospital, regional training. Each are having unique code, unit code. This is called unit code. That means if an area has 5 mines, so there will be 5 unit code. That is number 1, number 2, number 3, number 4, number 5, and regional workshop number 6, AD office number 7, regional store number 8, like this. This will be captured in the individual cost center wise. That is under a production cost center or under a service cost center. Financial data capture also central workshop, central hospital, and at company level. That means I have already discussed that regional central workshop of E&M and central workshop of excavation, that is company wise this is running, and all the areas are benefiting. The areas who are taking the services from that particular workshop has to bear the cost of that workshop, and central workshop and both the central workshop or central hospital apportion the cost to the different mines based on the actual job they have done or actual patients they have rendered services. Cost record. Now the main thing is come, yeah, how to prepare the cost records and cost booking. First of all, you must know in previous slide that every cost centers are having a unit code, whether it is a service unit, stores, workshop or central workshop or anything like, everything has a code. One thing I have to tell you for right now, central workshop, both the central workshop, A&M and excavation are treated as a area. In coal industry, central workshop of excavation and central workshop for A&M are also treated as area. That is their service area. That is not a production area, but rest of that area are production area. Different GL codes, general ledger codes, are mapping with the cost element of average cost statement. If you see the part of the average cost statement, as CMA Niranjan Mr. Sir elaborately discussed in the last webinar, the theory part, that means rules and regulations of the cost audit report or cost audit. I am not focusing on that issue again. I'm just straightway focusing in the coal industry and how to prepare the cost record and booking cost audit in the coal industry. So GL code are mapping with the average cost statement. If you see the element of the cost average cost statement, there is a material cost, direct employee cost, direct expenses cost, repairs cost, stores and spares cost, like this. And in each and every mine, there are different GL codes. That means GL code means financial code, under which similar nature of expenditure are captured. So according to the nature of that financial code or GL code, the booking mapping will be done at average cost statement. No separate set of book of cost audit is being maintained, because at present the cost audit is based on report based. It is not for cost record. Cost record rules has been abolished, and now only single rules is there: cost companies cost records and audit rules, 2014, amended up to 15th October 2019. So there should not be any separate record. The records are has to be maintained as per CRA 1 of that rule, and most of the companies having the infrastructure to maintain that code. If there some special need is there, the cost record is being prepared according to as per the CRA 1, which I will cover in the latter part for special items, how you will have to treat them. So now for the time being, you just see for a particular mine, different code, that is salary and wages, that is repairing, that is hospital expenses, that is civil expenses, that is explosive expenses, diesel expenses. These are all grouping under the different heads of the mapping with the different heads of the average cost statement as per cost accounting standard and as per your cost accounting standard and cost accounting policy of the company. The mapping is mapping at present done at mine level. First mine level mapping is done. After that, all indirect expenses of that particular area, that means expenditure of area office, expenditure of regional hospital, expenditure of regional workshop, etc., regional stores, are to be apportioned amongst the mines in some suitable basis. What are the suitable basis? The expenditure of regional hospital is added to the direct employee cost of that particular mine, share of regional hospital as per on the basis of manpower ratio. Workshop is based on actual basis, on the job card basis, or if there is no basis, there will be production basis. Area of his expenditure and stores is apportioned between the mines on actual production basis. I repeat, actual production basis. And this area of his expenditure, area stores and area of his expenditure are booked under production cost and other production overhead. Because in coal industry cost accounting policy, area office is treated as a support system of the mine, and as a for that reason, up to the area level, indirect expenditure are booked under production overhead. Expenditure related to the employees are booked under direct employee cost. Expenditure of central hospital apportioned based on the manpower of the mines. Central hospital, regional hospital, both. Company headquarter and CIL headquarter. You just remember in the very beginning, I have shown that a subsidiary hierarchy. Every subsidiary has a company headquarter, and also CIL as a CIL is serving the different subsidiaries. They are charging some money, rupees 5 per tonne. This is the apex charges, and that has to be apportioned between to the different companies, subsidiary company on the basis of actual production. Again, on 5 per ton, and the CIL overhead will be apportioned in the mine on the basis of rupees 5 per ton. But expenditure of the company headquarters is based on the actual production, because there is no system of charging any charges from the different areas by the company headquarters. So these costs will also to be absorbed in the different mines. So what is the picture? Mines own cost according to will be first determined through the mapping of the different DL codes. Next, that will be added in the different head of the service unit cost, that is regional stores, regional hospital, regional workshop, and area office, regional stores, etc. Again, there will be added central workshop cost, central hospital cost, again company headquarter and CIL headquarter. These all costs are to be absorbed in the mine, because only coal is the product of the coal sector, and all costs should be absorbed by the coal itself. So you have to keep in mind the hierarchy of the organization, from flowing of data, from where to where data is flowing, which cost center service give service to which mines. These are all has to be taken into consideration while you conduct the cost audit of a coal sector. Otherwise, you will see a average cost statement prepared by the management, and you cannot track, because Coal India is a ocean, and you cannot track the justify or verify the expenditure if you do not go step by step. You have to go step by step, like what I am telling, like this. You have to go. Otherwise, seeing a single figure, you cannot verify the book. One to one, the book the data will not be verified. You have to go to the whole mechanism of the preparation of the average cost statement. Otherwise, you will not be able to verify the annexures. Expenditure of central workshop booked in predetermined rate. Here one point is to be noted. Expenditure of central workshop, when is booked under predetermined date. When the job was executed by the central workshop, it raises the invoice. It raises invoice at a predetermined machine hour rate, and that has been charged on routine basis. Here there is a scope for under absorption, over absorption. But before that, whatever I told, that has been all on actual basis. So there should not be any under or over absorption. There is no scope for under or over absorption. This is the system of coal industry. This is not a manufacturing industry where predetermined date is applicable. But in case of workshop, central workshop, there is a predetermined date against repair and maintenance. I am talking how to deal with this in the next slide. Preparation of average cost statement. Mine-wise mapping, which have been already tell, B2. Next, mine-wise opening stock and closing stock you have to valid. Here the valuation of the opening or closing stock, that is closing stock next year opening stock, the 31st March cost per ton as per average cost statement has to be taken for valuing the stock. This is the cost accounting policy of the company at present. The cost per ton as on 31st March is the rate of per tonning, the value of per tonning coal stock. The stock of cost of CR and headquarters absorbed in the defined mines as per actual production. Total cost of service center, that is regional cost, regional workshop, regional hospital, regional stores are apportioned to the defined mines on the suitable basis. That means for regional stores and the area office on the basis of actual production, hospital for manpower basis, workshop on either on actual basis or on production basis. If actual basis is not available, on production basis, like this. The cost of consultancy charges of CMPDI. CMPDL is the only company who is rendering consultancy service to the other subsidiaries in the coal sector. So CMPDL is charged to different subsidiary and take money against their billing, and that consultancy charges has been booked under production overhead, other production overhead on actual billing basis, because this is on actual billing. Whatever the bill has been raised by the CMPDL, that has been accepted by the mines, and mines has been booked is under production overhead. Area-wise average cost statement prepared. After preparing the mine-wise average cost statement like this, all mine, all service center has been done. Now only production mines are there. All the production mines have been added together on line item for preparing the area-wise average cost statement, and that area-wise average cost statement has to be reconciled with the area-wise audited profit and loss account. This is the duty of the cost auditor appointed for that area. It is to be done. What are the different elements of the difference? I should not repeat here, because one aspect is valuation of coal stock in finance and cost, and another some cost, income and cost are not taken in the cost record in average cost statement. For two reasons, there will be the difference, because there will be no under or over absorption in coal industry. The after preparation of the accounts at headquarter level, if it is seen that a workshop, central workshop, has a profit element or a loss element, that will be distributed among the different areas on the basis of the debit note, that means actual bill raised by the central workshop, to absorb within the production. So at the year end, there will be, when the cost records are prepared, there will be no under or over absorption in the coal industry at all. Cost of area office is treated as a production overhead and apportioned between the mine on actual production basis. The consolidated difference of different annexure at company level done at for audit report of area. The consolidation part, the company as a whole, that means subsidiary level annexure are prepared on the basis of audited annexures of the area, different area. Defined area, that means if you consolidate company, reporting is done by company as a whole, not area to area. Lead cost auditor, it is the duty of the lead cost auditor to consolidate the data of the areas, audited data, and file and prepare report as a consolidated manner, taking into consideration the observation of the area cost auditor. This is the present picture, and at CIL level, what I have done, CIL has a separate colliery, Northeastern Coalfields Colliery, NEC, which is at Margarita, Assam. That is a standalone cost audit of the Coal India. Again, I have to consolidate as a lead cost auditor of the Coal India of the all audited data of the lead cost auditor of the subsidiaries. And as a whole, coal industry's cost record has been prepared. Though it is not as per company's cost record and audit rules 2014, still Coal India is maintaining the consolidation part to the lead cost auditor, and lead cost auditor also placed this audit report, consolidated audit report and data to the audit committee and board. Now this is the annexure to the cost audit report. This is similar for all industry, irrespective of any industry. This annexure is applicable. So I need not focus on that. This is the only this annexure is A1. Total audit report has 4 parts. Part A, Para B, Para C, Para D. Para A for general information. Para B is for manufacturing sector. Para C for service sector, or Para D company as a whole. So whether it is for all, for manufacturing and service sector. In Para A, there are 4 annexure. Annexure 1, details of information regarding companies. Annexure 2 is for the difference of cost auditor, details of cost auditor. Para 3 is for cost company's cost accounting policy. Para 4 is product or service details. That means Para 4 must tally with the revenue part of the profit and loss account. Here one thing is to be mentioned, that in coal industry there is other operating income. Other operating income. What is other operating income? Other operating income in coal industry is surface transportation charges. What is surface transportation charges? I have told you when I discussed the railway method of dispatch, that coal has been transferred from pit head or stockyard to the siding. The cost of transportation is recovered through the coal bill from the customer. That is called surface transportation charges. That means in surface transportation, what is that? And there is also a rule. Within 3 kilometers, you cannot charge anything. 3 to 10, there is a rate. 10 to 20, there is a rate. And beyond 20, there will be on actual basis. Sometimes there will be some mic is on, so echo is going on. Please unmute your mic. Please unmute. Please, I request all of you to unmute your mic. So surface transportation charges recovered from the customer is coming under other production overhead. Other operating income. One disputed element is there, evacuation charges, which is also recovered from the customer, which is nullified against the selling and distribution overhead. But in some of the subsidiaries having the opinion that should also be part of the other operating income in the cost statement. But the still dispute till today only coal transport surface transportation cost is booked under other operating income. This is the annexure part B, E1. Pujanka, please unmute all the mic.
Yes, sir.
Please unmute all the mic. Otherwise, it
Yes.
is meaningless to tell all these things.
Yes, sir.
Now, this is the part B. Part B means manufacturing unit, for applicable for manufacturing unit. And though coal is not a manufacturing unit, it is an extraction of coal. But also, booking of annexure part B is relevant for coal sector. Here, capacity, available capacity, actual production, actual available quantity for dispatch, actual dispatch is there. So you have to collect this quantitative information from the management. And how you will collect? You have to collect it in written format with signed copy. This will be filled up from the information given by the management. And this is average cost statement format. Here, all mines are having average cost statement. After that, service center cost has been added to their each mine, and after clubbing of the each mine, area average cost statement prepared, and after consolidating area average cost statement, company average cost statement has been prepared, are being prepared. This is the chain of cost record keeping and auditing. If you are appointed as a lead cost auditor, you have to go through all these things. This is B2A, 2B, 2C. B2A for direct material. In coal industry, there is no direct material. Details of 2B, details of utility. Here, power is only the utility. 2C, industry specific expenses. For coal industry specific expenses are two. That is, number one, overburden OBR adjustment and mine closure expenditure. These are the two industry specific expenses for coal sector. Part D, D1 is the statement for profitability, which come from average cost statement itself. So if you prepare the average cost statement, that this data will be filled up from that cost pattern. That is current year sales, cost of sales margin. Previous year, same phenomena. It will link to, if you link with this average cost statement, it will automatically populate it. Next, it is reconciliation statement. Here, profit for as per cost record, that means average cost statement taken. Profit or loss as per cost record means profit margin as per average cost statement. Income not considered has been added. Income which has not been considered in the average cost statement has been added here. Expenditure which has been not considered in the average cost statement will be deducted from there. And last part is other at the difference in valuation of closing stock. Number 4 point, that has to be under or over absorption, overvaluation, which I have already discussed. Money valuation as per coal stock has been valued at cost, and in finance there will be cost or market value, whichever is lower, net realizable value, whichever is lower. So there must be some difference, and that difference should be reported here, and other adjustment if any, and then the company audited profit and loss account will be there. Well, area audited account will be there. Second part of value addition. Value addition should be prepared from audited profit and loss account and balance sheet. I repeat, it should not have any connection with any cost records prepared in the average cost statement or anything like. It is to be prepared from audited profit and loss account and audited balance sheet. Next part is financial position and ratios. This annex chart is also to be prepared. This is D3, D4. Value addition is D3, reconciliation D2, and profitability statement D1. D4 is, has to be done from profit and loss account and balance sheet of the company audited. And for capital employed, that you have to take in the average of net fixed assets. You have to calculate the average net fixed asset for computing capital employed as per guidelines issued by the Institute of Cost Accountant of India. This is D5, related party transaction. This is the replica of financial records. Whatever the related party transaction reported in the financial account, you can take it as it is. This is annexure for reconciliation of indirect taxes. Here only GST is applicable for coal industry, because excise is not leviable at present at coal industry. So only GST reconciliation is there, and you have to fill up from the R1 and R2, R3. That means GST R1 and GST R3 consolidated part has to be reported here. It should be reported as a company as a whole. All the element of the company D part should be reported as a company as a whole. But at area level, D2 must be prepared to check the accuracy of the average cost statement of the area. So in area level, there will be an average cost statement, area average cost statement, consolidating of mine average cost statement, area reconciliation statement. Even different areas has also prepared this item also. This D6. This means reconciliation of indirect taxes, because this will consolidate at headquarter level to arrive at the company level information. But nowadays, coal industry has been streamlined this, and all the returns are been filed from the headquarters. So there will be no need to consolidate this annexure, area-wise annexure. But if any area is preparing, you have to verify this from their R1 or R3. That means GST R1 and GST R3. Okay. Now these are the similar annexure. These annexures are equal or same for all industry. So that's why I am not telling headwise. Just only to have the overlook, I'll tell these things. And the intricacy part of the thing I have already told. Industry specific expenses, overburden removal, OBR adjustment and mine closure expenses, and surface transportation costs should be taken as a other operating income. These are the only intricacy in this total. Otherwise, everything should be come under what I have already discussed: how to prepare the average cost statement, how to book the cost, how to mapping the cost. That's why. Now we are coming at audit program. After appointment of the auditor, cost auditor as a company, coal company, we have to framework audit program. What will be the audit program? Number one, first you have to learn about the company, area, wherever you have been appointed. Visit the production and service cost center. Why? To have the information which production unit takes services from which service center and which service center gives services to which production center. Next, you have to discuss with the HODs, head of the departments of the area or company, to have the insight of the data flow and treatment of various costs. and mechanism of the operation, actual operation going on. Because I am already told that coal industry is a very versatile industry, and you can see within an area, mine to mine, the practices varies. Within a company, area to area, practices varies. So you have to, if you have appointed for three areas at a time, you will see that three areas are operating at three different style. It may not be equal for each and every mine. There will be no standardized practices in coal industry. So you have to be very careful for a particular mine or for particular area, verification of records. Collection of mine-wise quantitative and other documents or information. I will give the list of these documents, what has to be taken. Next, verification of those with the basic records. Number one, visit of production and service cost center, discussion with the HODs, collection of the quantitative and other document or information, verification of those records, and last one is forming opinion of the basis of the observation or verification. After collecting this information, after verification of the records, you have to form the opinion to write a good and value-added report. I repeat, a good and value-added report. I have seen, being a lead cost auditor of coal industry, the report has prepared at area level or at headquarter level is not as per my expectation. I'm talking about in this fashion because all are honorable auditors. They have done their duties in as per their record, based on the records produced before them. But when I consolidated the report, I am not fully satisfied, and that has I have been communicated to them that from next year you have to improve the audit report like this, and I have given them suggestions. I don't know whether they will follow that guidelines or not. Some of the auditors have been followed this year also. Whatever tips I have given to them, because I have no direct authority to give them instruction, because in coal industry hierarchy, the lead cost auditor is the only person who is powerless. He has only to consolidate the report. Whether the report is wrong or right, whether it is commensurate with the size and business of the nature of the business of the company or not, the lead cost auditor is bound to consolidate the observation of the lead cost auditor of the subsidiary and produce before the auditor. So I have taken my own perspective. I have prepared some analysis, and I have produced, send it to the company for board and audit committee. At my own level, collecting data from different mines, because I was in coal industry, so I have have the opportunity to collect the data. I know how to collect the data, and I've collected, and CIL headquarter audit department, cost audit, cost and budget department has cooperated a lot to collect that information, and on the basis of that, I have prepared that audit analysis. And I am because in my work order there will be a clause consolidated report you have to prepare, and also you have to analyze mine wise and other details. So I have to analyze the data, and for that I collected from my own through cost and budget department of the coal industry, Coal India. So for the sake of our terms and condition of the appointment letter, I cannot disclose all these things. Only if you want to produce a good and value-added report, you will be satisfied also management will also satisfied. Because management wants the value addition. Otherwise, our profession, what is the meaning of our profession? We are not a compliance auditor like chartered accountant, meaning financial auditor. They are only compliance auditor. We are compliance auditor. At the same time, we are cost audit is also efficiency audit. So if we do not increase the efficiency of the company at various levels, what is the utility of our auditing? And the government has constituted a committee to judge whether the cost audit is beneficial to the industry or not, whether it is beneficial to the government or not. If they found that it is not beneficial, I am apprehending that cost audit may be stopped for particular industry or some of the industries. So to avoid this situation, we have to do a lot beyond the rules and collect the data and prepare the value added report. How? I will discuss in later part. The data and information required for cost auditor, I will tell one by one, and how we will get that I will also discuss. Number one, physical copy of audited profit and loss and balance sheet along with unit trial. Unit trial means every unit. Unit means production unit. That means mines, stores, all are called unit in coal industry. Unit trial means you have to take the trial. Otherwise, trial means summary of the details of the financial code-wise details. Otherwise, you cannot check the financial grouping in financial mapping in the average cost statement of the mines. So you have to have the audited profit and loss account and balance sheet along with unit trial. Don't forget to take unit trial. Next, you have to collect the groupings, how they are grouped, how they are mapped with the trial balance, and that should be tallied with the trial balance total. List of foreclosed contract. Now, for some of you, foreclosed contract is a new term, but it is a very well-known term in manufacturing, also in coal industry. What is foreclosed contract? A contract when a contractor cannot fulfill his duties in a manner of as per work order, the contract has been foreclosed. So you have to take the foreclosed contract. Why I am telling you have to take the list of foreclosed contract? Because whenever a contract is closed, the work is not irrelevant. Work is still relevant, and company appoints another contractor, inviting tender. So the delay in processing that work cost the price of the latter part, second contractor may be high from that one. So these are all abnormal cost, and you have to segregate this from the normal cost of production. That's why you have to go through the list of foreclosed and what are the losses company borne. You have to ascertain that has been that will be treated as a abnormal cost. Again, you have to verify whether there is any penalty or not imposed by to the contractor. If there is a penalty, so you should reduce that penalty from the cost loss borne by the company. Next, hindrance register. Again, hindrance register means whenever a work order is issued, it is applicable to any other industries also. The day-to-day progress of the work is written in the hindrance register. It is applicable for civil contract, coal transportation, OB transportation, and other contractual works in coal industry. So hindrance register tells whether the contractor has been doing the work as per terms of contract or not. If the company stipulate that 400 ton per day to be transported by a coal transporter, but they have transported only 300. So that should be recorded in the hindrance register. And company, if the company contractor is at fault by placing less truck, then company the contractor should be penalized. That should be recorded. That should be taken into consideration while computing the cost of production of the coal transportation, because the penalty should be deducted from that coal transportation cost. Or if the company fails to recover the coal transportation, that cost should come under the abnormal cost of production, abnormal cost, and to be taken in the reconciliation system. So you have to keep this, take this into your control and verify this one. Next, communication of installed capacity assessment done by the CMPDI. What is this? In B1, we have to report installed capacity. The installed capacity in the coal industry is declared by the CMPDI, our consultancy company, at the beginning of the year. But one lacuna is there. If any particular machine is introduced during the year, that is not reflected in the communication of the installer. That will be reflected in the next year. So, whenever you appointed as a cost auditor of a company, you have to take the communication of CMPDI for beginning, initial, opening installed capacity. Again, you have to collect the data. What are the machineries introduced during the year and what is the capacity, how and to what extent capacity has been enhanced during the year, because that has also to be recorded in the, to be reported in the B1. So these points should be very carefully, and don't forget to take this written document from the company. And company is easily, you will get this information, but the communication easily, because every mine or every area has having this communication, without which they cannot prepare the cost annexure to cost audit report. Next, Form H. This is a specific record applicable for mining industry. Form H, especially in coal industry. Form H, which is a must document for statutory auditor also. Here, production, dispatch, and closing stock. What are the opening stock? What are the production during the year? What are the dispatch during the year? And what is the closing stock? That should be written in the Form H document. And for valuation of closing stock at cost, you need this document also to reconcile the B1 quantitative details. You have to, you require this Form H. Without Form H, you cannot satisfy yourself that record, quantitative record of the reported in the B1 is verified. Next, internal audit report. In our cost audit report, we have to certify whether the internal audit or cost record is commensurate with the size and nature of the business of the organization or not. So you have to collect the internal audit report. Here one point is there. In our annexure format, that means CRA 3, our institute has written that internal audit of cost records. Again, there is a fallacy that there is no separate cost records, because the records which are kept by the company, from that average cost statement and other details are taken in different annexure. Then separate cost records are not being maintained. Then this point, I think I have pointed out in different forum that this should be reported, this should be rectified. But this is in the process. Now institute has also understood, MCA also understood. But for the time being, you have to collect the internal audit report to see whether there is really an internal audit system is there or not, whether that is commensurate with the records or not. OBR computation sheet. I already told that coal industry is a peculiar industry where though two industry specific expenses are there, mine closure expenditure and OBR adjustment. For OBR adjustment, cost of OBR is to be calculated. So how the OBR is computed, you have to collect that sheet. Generally, in coal industry, exact figure from coal OBR cost, the OBR adjustment in the financial record has been taken. But for your satisfaction, you have to check the accuracy of the OBR computation sheet. OBR computation, what is OBR computation? How it is coming to the picture? It is not a normal phenomena in all other industries. It is available only in the mining industries, specifically in coal industry. When a mine is started, a project report is being prepared by the CMPDI, and there for open cast mines, they specify how much OB should be removed to achieve how much coal. This is called stripping ratio. That stripping ratio may vary in actual working. So the standard ratio means as per project report, as written in the as decided by the CMPDI. Actual ratio means what has actually been measured at the time of actual operation. The difference between the two is adjusted through the OBR adjustment. This is a very complicated process, and for all of you, I tell that OBR adjustment method has been prepared by N.K. Prasad Saab of our institute, and that is still now continue till today. Nobody is dare to change this. Year after year, that is going on. The OBR adjustment computation prepared by N.K. Prasad. Now you have to see the OBR computation, collect the OBR computation sheet. Next, every area or company having a monthly report of statistical data. Every company. You have to collect that monthly report where you can have the reported production, machine utilization, dispatch, and other physical data. Manpower loss, strikes, accident, everything reported here. That is a monthly report. And you have to check the monthly report, and for monthly report for March is the progressive figure, and you can check it, cross-check with the Form H and for B1 so that the data is more accurate. Next, machine-wise HSD oil consumption with norms vis-a-vis previous year. You have seen that there are various machinery, whether in UG mines or whether it is open cast mines. Generally, HSD consumption, as HSD consumption is much more in open cast mines, we are taking machine-wise HSD oil consumption for open cast mines. There is a norms for each machine. There is a norms for consumption of HSD oil. You have to collect the data, the norms of the each and every machine. That means dragline, shovel, dumper, dozer, etc. And data for previous year also. Actual consumption, norms, and previous year data. Otherwise, you cannot compare all these things. Next, machine-wise capacity available and utilization. It is applicable for your open cast mine. With respective norms are indicated director's report vis-a-vis previous year. In director's report, annual report, there is a mention in the capacity, machine-wise capacity available and utilization. You have to take that report and keep it, and while preparing the report, your report, you will utilize this data. How? I will tell you in my latter part. Mandates lost due to strike or abnormal situation. Because in a coal industry, there is a regular phenomena for strike or chakka jam or like this or power cut. So these are all abnormal situations and the mandates lost. For due to that reason, you have to collect the data. It will not automatically populated in the average cost statement or trial balance. You have to collect that data, calculate the mandates loss and value with the mandates loss into EMS. EMS means earning per man shift. One man shift means 8 hours works. So you have to value this amount and take into out of the cost of production should be in the reconciliation statement. Next, month-wise power analysis statement. What does it indicate? Power analysis statement indicate penalty levied by the electricity department, whether the increased contract demand, recorded demand, power factor, these are to be done. If the power factor is high, that is for 95%, more than 95%, electricity department impose penalty. Whether 95%, below 95%, electricity department also penalty. Whether recorded demand is more, electricity department is levied penalty. Whether it is less, that is also penalty. These are all these penalties are come under abnormal cost, and that should not be the part of the cost of production. You have to take, if you analyze and you have to calculate the quantum of penalties and all these things, you can figure out this and take it out from the utility cost in the average cost statement. Month-wise consumption statement of explosive, timber, steel support. In underground mines, timber or steel support is required to support the roof, to avoid the roof fall. So you have to collect the explosive, or without explosive, mining cannot be possible, except in continuous miners and surface miners. So explosive, timber, steel, these are the utility, these are the direct expenses, and it has to be corrected quantitative data month-wise consumption, so that you can compare with the previous year and consolidate, compare with the value appeared in the average cost statement. That because you know the value, where from value is coming? Value is coming by multiplying rate into quantity. So if you have a quantity and know the rate, different rates, these are easily available from the store. So you multiply and check the accuracy of the value put in the average cost statement. Computation of activity-wise depreciation. There are different activity: administrative activity, selling and distribution activity, production activities. These are the major activities, and you have to compute the activity-wise depreciation so that you can book depreciation as a whole. Otherwise, you can be booked as a depreciation under depreciation in the average cost statement, and that will not be as per cost accounting standard. So activity-wise depreciation should also to be collected, or if company is unable to produce, you have to qualify this report. Again, year-wise incentive credited in the sales account. What is incentive? Company coal sector, in coal sector there is a fuel supply agreement, FSA, fuel supply agreement with different powerhouses and companies. If the company is able to deliver, dispatch more than 95%, the company is earned incentive. But the thing is that if the 95% is achieved in the month of March, generally it is happening, the incentive credited in next year. That means incentive earned for the year 2022-23 may be earned, maybe credited, maybe received by the company in 2023-24. So whenever you go for audit, in the year 22-23, you have to compute, take the note that how much incentive received in the year 23-24 so far, because you are doing audit in the month of August, September. So in that time, audit has been completed and that amount has been credited in the company's account. So this breakup is needed to identify for prior period expenditure, prior period incentive, or current year incentive. Because prior period incentives could not be part of the average cost statement. So you need this information. It will not be easily available. You have to take pen for that. Take this figure year wise breakup. But the company has having that data, and you can have to take this data. Year-wise breakup of credit notes. Here is also same analogy. Credit note means if the company delivers less quantity, company issues credit notes. If the quality has been deteriorated, company billed at G1 or G2, but it appears at the end customer that it is G3, so company has to give the credit note for the quality deduction. So this credit note should be analyzed year-wise, and the prior period credit note should be ignored, should be taken into reconciliation statement. Only current period credit note should be taken into consideration in the average cost statement. Variance analysis with budget and previous year in budget heads. A company has a standard budget heads, coal sector, and variance analysis budget with actual expenditure versus budget and actual expenditure versus previous year. It will help you to identify or figure out the lacuna or increase or decrease of cost heads, and where you have to focus on that to dig into furthermore to have the value added report. Cost finance reconciliation statement is also equally important to have your judgmental opinion. Now, verification of cost record. How you have to verify the cost records? First, you have to verify the mapping of the financial records as per cost accounting standard or company's cost accounting policy. Next, you have to identify any abnormal increase, decrease of any element of cost, which I have already told you when at the time of information or document collected. Verify valuation of opening and closing stock. Verify correctness of service cost centers and expenses and apportionment of expenses of service cost. So whether the ratio has been taken correctly or not, whether the all the service cost center has been wiped out, absorbed in the mines or not, you have to verify. You have to verify the GST and other indirect tax expenditure, input tax credit taken or available. If there is any lacuna in the company, you have to point it out. One funny thing is that in coal sector, 5% GST is leviable on coal dispatch, and company is earning 18%, 28%, 12% input tax credit. That means 100% input tax credit is not absorbed through the output tax. So there is a huge balance in the Coal India record, and government is not allowing us, coal industry, to take back the refund of that element. That is separate chapter. But you will see that input tax you have to verify. As a cost auditor, you have to report all these things, that how much has been leviable as per taxable value, and what is the input tax credit, and what is the net tax payable, and how much has been paid through cash ledger, and the balance or penalty, if any, has been levied by the GST department, that has to be reported here. Verify all the annexure to the cost audit report with the basic records. Examine. This has already been covered in various aspects. Examine civil contractors bill, coal transportation bill, OBD removal. These are the contractors bill. You have to assess the internal checks and control. What are the checks? Because in coal industry there is a system of MB, measurement book. In every contractor's bill, there is a measurement book signed by the management, site in charge, and the contractor. And that bill has to be prepared. Bill is being prepared by the company, and contractor is signing on the bill. So whether the bill has been prepared on the basis of MB or not, whether there is, if there is a item for penalty, leviation of penalty in the MB, that has to be reflected in the bill or not, that is a test check basis. You have to verify this for your satisfaction. Examine and assess the budgetary control system. You have to see whether the expenditure has been incurred as per budget or not. What are the mechanism of the budgetary system operated? Coal India has a very good budgetary system because I have worked in cost and budget throughout my career. So I know there is a budgetary control system, and that is very well. But still, in some of the cases, there is over budget expenditure. You have to point it out in your report, that one also. Verify cost and finance reconciliation in budget head, verify variance analysis, etc. These verifications are for not for compliance part. These are for your reporting purpose. Now come treatment of some special item. Computation of cost of OBR and its adjustment. I have already discussed this item, that OBR adjustment is the major expenditure in average cost of production, and which is treated as industry specific expenses. So OBR adjustment expenditure has to be taken into consideration, to be seen very carefully, and as per the formula, laid down formula of the company, whether it has been prepared as per laid down formula of the company, that is prepared by the N.K. Prasad Saab. And OBR adjustment is nothing but to keep it parallel, to keep it relevant, matching with the coal and OB expenditure. That means if in a particular year only OB has been removed, no coal has been extracted, so in that case, what will be the cost of production of coal? Here, cost of production means cost of production of the coal. So you have to compute the adjustment of the coal production. So you have to keep it in a reserve, and only to that extent the coal has been exposed. You have to see that taken into OBR cost to that extent only to be considered. So here also you have to see the standard ratio and actual ratio, and the difference between the two are to be in the OBR adjustment, and which will be a part of the industry specific expenses. So it is a very special item. It will be not available for any other industry. Next, major overhauling of HEMM other machineries. As per cost accounting standard 4, repair and maintenance, any major overhauling should be treated as a deferred revenue expenditure. But in coal industry, in open cast mine, there are lot of major overhauling. You have to take a list of major overhauling and see whether they have treated this as a deferred revenue expenditure or charge entire amount in the current year. If that is the case, you have to point it out or tell them to segregate this and take the current year's portion only, or report it separately in your report. So major overhauling of HEMM or other machinery is a major concern for your report. Next, treatment of cost of common siding. I have already told that in a particular area, 2-3 mines uses a single siding. So the cost of the siding, that siding, should be apportioned between the mines who are using that siding. But in fact, whether it has been done or not, you have to take into the consideration. Otherwise, if it is charged in the mines, siding under a particular mine under which the siding is there. So that will be wrong in principle, because the benefits has been derived by the different other mines also. So expenditure should be defined by other. At present, CHP cost has to be computed after introduction of SAP. These has been wiped out, but till 22-23 there is a problem, and we have to compute it separately and take it into consideration for bifurcation. Again, coal transportation cost. Coal transportation cost has been two part. Number one, coal transportation from pit head to stockyard. That means within the mine, because if stockyard is 2 or 2 kilometers, 3 kilometers distance, so there will be a coal transportation cost will be there. Again, if the siding is not within that mine, for other mines, and there is a distance of 20 kilometers or 10 kilometers or 8 kilometers, there will be a cost of coal transportation. Now, question is that the cost of coal transportation from pit head to stockyard is the production cost, but cost of transportation from pit head or stockyard to siding is the cost of selling and distribution part, and for which we are collecting surface transportation charges, which will be eliminated, or which is netting up in the selling and distribution cost. That means from pit head stockyard to railway siding is the cost of selling and distribution, or pit head to stockyard is the cost of production. Now, problem is there. The company is giving the composite work order for coal transportation. Sometimes it transport from pit head to stockyard, sometimes it transport pit head to siding or stockyard to siding. Now, how to do? There are two GL codes in the coal industry for segregating that expenditure, but the problem is that everybody is using same code. So you have to go for the contract-wise cost and segregate all these items so that correct picture can be depicted in the average cost statement. That's why I have kept it in a special item. Mine closure expenses. As per the guidelines or act, every mine has to provide expenditure 5% of the cost as a mine closure expenditure each and every year. The mine closure expenditure charged in the professional loss account, again it is a part of our industry specific cost. Mine closure cost means the cost provision which have been kept for mine closing, because whenever a mine is started, government gives the right of surface right, with the condition that when your mining has been completed, you have to give us back at the same condition at which you have taken it. That means you have a huge expenditure at the close of the mine, at the end of the mine, when all coal has been extracted. So you have to keep provision for that. Only this provision is not out of the purview of the cost per ton. All other provision, financial provision, are kept out of the purview of the cost of production, except this one, because this is without which this is a statutory provision, and without which you could not mine. You cannot allowed to be mine. So mine closure is a specific industry expenditure in coal industry. Treatment of expenditure of explosive and detonator issued to conductor in outsourcing mine. In coal industry, when it is nationalized, all are departmental. Gradually, some mines are giving outsourcing because manpower is drastically decreasing day by day. So some mines are giving on outsourcing basis. the outsourced contractor is operating the mines, and they have been issued the explosive, because explosive, for purchasing explosive there should be a license, and there is a magazine in the mine, and the license magazine. So you any contractor, no contractor can purchase explosive in the market. So explosive is supplied by the company itself, and you have to check whether the cost of the explosive issued to the company, to the contractor, has been duly accounted for or not. Treatment of cost of sub-area office. I have told a few slides ago that in some area there is a sub-area concept. Within a sub-area there are 2-3 mines. So the cost of sub-area office should be segregated between the, should be apportioned between the different mines. That has to be kept in mind where there is a sub-area. Treatment of cost of production in zero or very less. In mining industry, it is a regular phenomena. Some mines have been zero production, some mine is a very less production. For zero production, entire cost should be taken into the abnormal cost and treated as a reconciliation item. But what about the very less production, where cost of production is nearly 4,000, 5,000, 10,000, 20,000, whatever the case may be, because fixed most of the costs are fixed in the mining industry. So you have to take the judgment whether the cost of the less production mine, what is to be done. In one, some of the auditors are opinion that it should be some portion has been taken in the cost of production, some portion has been taken into the out of the purview of the cost of production. But no unanimous treatment is there. At present, for less production mines is treated as a part of the cost of production. But in my opinion, it should be segregated and at part, because the matching of revenue and expenses is defeated in taking the entire cost in the cost of production. So if we keep watch in this type of cost. Next, treatment of cost of closed mines. Closed mines, what are the cost of closed mines? The closed mine cost should be taken into under abnormal cost. Treatment of prior period income expenditure, it is common for everybody, because these are not to be part of the cost of production. Treatment of hospital catering to more than one area, that cost should be apportioned in different areas which are taking the benefit. Treatment of cost of shortage, over 5% of the book stock. If logic is there, if rules is there, after 5% of book stock allowable difference from book stock and measured stock. Coal has been measured after year end. So if this is beyond 5%, that should be taken in the abnormal cost and should be shown in the reconciliation statement. Recovery of penalties as per hindrance register. Recovery of any penalty should be square up against the expenditure. Transfer pricing of coal mine to washery. Here the policy of the company is that company transfer the coal to washery at notified price, and the washery has taken into it as a cost of production, cost of input at notified price, including levies. That is the production cost, input cost. So, but this should not be as per our generally accepted cost accounting policy principle. But as there is no specific cost accounting standard for transfer pricing, so coal industry is following like this. If you have differed from this opinion, you can report it. Again, Dankuni coal complex. Dankuni coal complex is a completely separate. No coal production is there. Its input is coal, and from coal there is a coal tar and different other ammonia and different other products are doing, and for that specific chemicals, some chemicals are used, some processing. That this is a process industry. That is not a coal industry, that is a process industry, but it is Dankuni Coal Complex is a part of the Southeastern Coalfields Limited. You have to take into the special consideration for cost of Dankuni Coal Complex. Capacity increase or decrease during the year. What I have told, the machinery used introduced during the year or machinery surveyed of during the year, you have to take into adjust the installed capacity at the beginning of the year as reported by the CMPDR. You have to adjust that one. Treatment of cost in fully MDO or outsourced mines, that has already been discussed. The cost in MDO mode or outsourced mode. Nowadays, different mines are operating in MDO or outsourced mode. You have to take into consideration the what are the prices, contract price, and how it has been being treated. What are the departmental manpower are engaged in this MDO mine and how they have been treated. Treatment of cost in mixed mine, that is partly departmental, partly outsourced. This is a very vital point because you have to segregate the departmental cost and outsourcing cost, because outsourced mine will be paid at a per ton basis, but departmental cost has a different cost element. So you have to take into consideration of this point also. Apportionment of cost between OB and coal. If you are not able to segregate the OB and coal, the cost of OB cannot be ascertained correctly. Determination of cost of utilization of equipment, where same equipment is used for both coal and coal. It is a common phenomena in coal industry. The dumper is used for coal and OB both. Dragline is used for coal and OB both. So you have to calculate the cost of OB, taking into consideration the OB part cost only. Now, last point is, what are the areas to be covered? Mine-wise productivity, I have already covered all these things in calculation. Mine-wise productivity and mine-wise productivity here means OMS, output per man shift, and man and machine. Mine-wise machine availability and utilization performance, profitability of mines, mine-wise capacity utilization, performance of ongoing projects having time overrun and cost overrun, performance of controllable cost, gate slippage and downgrade billing. Gate slippage means you have billed for this G1, but the company accepted at G2. There is a gate slippage, and that cost has to be taken reported in the year report. Overall performance of the machine, compliance of cost accounting standard, review of internal audit report. This point I have already discussed. So, but these are the points. This should be in your report. You have to report all these things. Now, how you will value added to your report? Manpower utilization. If there is a surplus or surplus manpower idle, so idle time cost has to be ascertained, and that should be reported. Productivity of underground mines, that means powder factor of explosive. Productivity of underground SDL, LSD. SDL means it is 100 tons per day, LSD 170 tons per day, and continuous minus 40 tons per minute. Specific consumption of power, mine capacity utilization, efficiency of explosive. You have to report on all these aspects. HEMM performance, specific consumption of HSD oil, productivity OMS, output per man shift. How it is calculated? It is calculated total production divided by total man shift deployed. Man shift means 8 hours of a particular person. Break-even point, whether the mines is operating below break-even point or not, it is also a point of consideration. Staggered rest of whether there is a possibility of staggered rest of on weekly day off. So your production will be increased, productivity will be also increased. Cost of production, whether the cost of production is more or less or element of cost is more or less than norms or than previous year. Profitability, overtime cost, zero production mine, increasing trend in the some item of cost, sales analysis. These are the points should be add value to your report. I think I have completed my presentation. Now, I request the participants, if they have any question, please put forward and give. I'm ready to give answer to them. Though it is time has extended 9 p.m. But still I am here to give your answer, so that you can have a overlook. Any doubt, any question in your mind, please give. Please feel free to come forward, because I am ready to help you. I am ready to explain the details. What are the chat box says? Is there any question?
Hello.
Yes.
That's good evening, Sanat Joseph from Raipur.
Yes.
Hello.
Please tell me.
What is the difference between notified price and premium price?
Coal India is notifying the coal price for different grades of G1, G2, G3, G4. This is the notified price, and usually in a normal phenomena, there is a coal is selling at notified price. Or what is premium price? When the company goes for e-auction for a particular mine, the bidder is paying extra money. That is premium money. That is premium price. Okay.
Okay. So another question is that how stock are valued?
The stock is valued at cost. That point I have covered. Stock is valued at cost, taking in the cost per ton at 31st March.
Sir, how stock are taken actually? What is the procedure for taking stock quantity wise?
The quantity is the coal has been extracted from open cast or coal area and stacked in the coal yard and siding, and that has been measured by the coal stock measurement team, and that has been volumetric measurement, and that volumetric measurement, if it is more than 5%, it will be taken in the abnormal cost, or the volumetric measurement is to be taken as a base for valuation of the closing stock.
Yes, sir. Another question was that whether transportation cost, when it is taken separately, is bill raised for separately for transportation also, or is it included in the basic price of coal?
No, this is not basic price of the coal included in the basic price of coal. The transportation charges to the customer extra. It will be seen in the coal bill separately.
Yes, sir. Sir, another question was that is there any byproduct like fines, etc.?
No, there are three type of products. Coal fines is available in the Dankuni coal complex, because Dankuni coal complex processes the coal into coal tar and abnormal coal. The coal fines are available at that point. In the mine itself, there is generally three types of coal. That is, number one, steam, slag, and ROM. That means mixture of steam and slag is called ROM. These are the basically types of coal.
Sir, all are taken as finished price. No,
all are taken as a finished goods. All are taken as a finished goods.
Okay, sir. Thank you for your valuable information, and we enjoyed your presentation, and you shared your all thoughts and all your experiences, and you took through all of us through mining, as if we saw that we are just going through mining department, and this is not available for a ordinary person other than a mining person. Thank you, sir.
Thank you, Sanut Sahab. Any other person? Any question? Any question? Pujanka,
Yes, sir.
if there is no question, we can conclude.
Yes, yes. 1 second, sir. I extend my heartfelt gratitude to each of you for joining our today's webinar. Special thanks to our speaker, CMA Alokesh Datta sir, for sharing their insights and expertise. Your presence and participation have made this series a grand success. Let's continue to learn and grow together. Thank you. Today we just conclude this session. Thank you all of you.
Thank you. Good night
Thank
to
you.
everybody.
Good night.
Thank you.
you.
Thank you.